Hey, Bulls and Bears, what is happening? It is Sunday, November 27th, 2022. November is winding down, only a few days left until December. But anyways, let's get into the financial news. An investor put this out on his profile, Robert Kiyosaki. Kind of made me think a little bit. What does he mean? Listen to this. Many of you know I do not invest in equities, bonds, ETFs, or MFs. Please do not listen to what I'm going to say next. Okay, well, we're going to read it anyways. Quote, I would get out of paper assets. The world economy is not a market. I believe the economy is the biggest bubble in world history. God have mercy on us all. The part that kind of scared me was God have mercy on us all. God have mercy on us all. What does he see on the horizon where he says we're going to need help from God? So I pray that things work out okay and that we can get through this okay, because I know how big of a bubble we're in also. But to hear somebody like Kiyosaki come out and say this, pretty interesting. So what does he see on the horizon? What would we need? Divine intervention to help us get through it, to help us make it through this? Well, if things continue to go on the path that we're on, which is runaway inflation, cost of living nightmare, we're going to need a lot of help from a lot of different people, maybe even the big guy upstairs, if you know what I mean. But let's get into some other news here, financial economic news. New Zealand delivers record rate hike and is talking about and predicting a 2023 recession. Now, I have to come back to this pretty frequently because I still see a lot of people thinking that, okay, if this person gets elected, if that person gets elected, everything's going to be fine. If it was just about electing a particular person here in the United States or getting someone out of office here in the United States, then why do we see this global phenomenon of inflation? New Zealand, everywhere you look, the UK, nightmare inflation, energy utility bills breaking people's budgets. It's not just about one person. I wish it was that simple. If that was the case, then I would just be an activist for whatever politician was going to be able to fix all this. They're not going to be able to fix it. It's systemic. It's systemic. You have to come in and drastically change the entire structure, the entire monetary system, and no politician's going to do that. No one wants to make a major transformation on their watch, because it's then the downturn and the change in lifestyle that people are going to have to sustain and suffer through is going to be blamed on that person, right? So it's never going to happen. This is going to have to happen organically. Organic is not a word I use very much in describing the economy, but in the markets, because it's so manipulated. But when I say organically, I mean that people are going to have to realize by going through it, by suffering, what the real deal is. I'm trying to think of the best term to put it in, right? So what the reality is. And the reality right now to people is just take on more debt, buy the things you need, no problem. But now with this inflation, we've got a whole new ball game, right? This is unlike 2008 where we just saw a housing bubble. This is inflation worldwide and in most areas of the economy, in most sectors. The UK inflation hits 41-year high. Listen to this, what they had to do in the UK. Consumer prices rose 11.1% in the 12 months in October, since October of last year. The most since October 1981, a big jump from the 10.1% in September. Inflation would have risen to almost 14%, and this is out of the financialexpress.com. Would have risen to almost 14%, but the government had to intervene in the utility bills. And what they did is they limited the price of household energy bills to £2,500 for the year. And that's about $2,960 in US dollars. So they had to put a price control on energy over in the UK. They had to put limits on it. Otherwise, it would have been closer to 14% inflation. So people say, well, the government doesn't help. Well, in this case, they helped because they put a price control on it. They put a price cap on it. But usually when you do something like that, there's always some sort of other unintended consequence. There's usually rising costs in other areas. When you put price caps on somebody or something, you're usually going to see another area where prices go up because of that price cap. Take a look at the price cap that they want to do in certain cities on rents. They want to cap rents. Well, what's that going to do? It's going to have less investors buying property. Well, that could actually be a good thing if you look at it from the eyes of a renter, because your rent's not going to go up as much because there's going to be a limit on it. But also, it's going to make buying a home to rent out less appealing. So what that could do, that could turn around and actually put a bigger downward pressure, put more downward pressure on home prices, because you're going to have less investor activity in those markets, which also could be looked at as a good thing if you're someone buying a home. All right, but if you're looking to have home price growth help the economy, which it does, when home prices are going up, it actually helps the economy. When home prices go down even faster than they are now, and with rent controls, that will be another downward pressure, put more downward pressure on prices. You're going to make the economic collapse go that much faster. Now, if you're like me, you want to see the economic collapse happen more quickly. I would love for this to get over with in just a year and pick up the pieces, and let's start again with something a little bit more sane. But this is going to drag on over several years, if you ask me, in my opinion. We didn't see the housing market bottom for 4 to 5 years, depending on your location. Home prices didn't start rising again until about 2012. They started dropping in about 2007. So this could drag on for a long time. In my opinion, it's a much bigger bubble now, and I think the fallout's going to be much worse. So this could be a market where the bottom doesn't happen for 6, 7, 8 years. It could be a deep, hard recession, hopefully not a depression. But when people say don't intervene in the markets, well, that's one thing where they could intervene with rent controls, price controls, and actually help it. But there's also a downside to price controls. So what is the downside to capping these utility bills for these people in the UK? Well, you could say that the utility companies may not make profits, or they may go out of business and they might need bailouts. And who pays for the bailouts? You, the working person. So you could always say there's a negative side effect or negative consequence to anything, even if it seems to help at the moment. There's definitely the potential for negative consequences there. You know what I mean? Let's move on here. Next, nearly half Americans working, earning more than $100,000 now report living paycheck to paycheck. We talked about that maybe a few weeks ago. It's being reported now out of MoneyWise. And so things haven't changed, right? So if you're making over $100,000, we talked about a lot of $100,000 earners now are moving down, or downsizing, I should say, to Walmart, or shopping at Walmart now instead of the higher end retailers like Bed Bath & Beyond. I guess that's not high end, but it is more expensive. So instead of Macy's, what's the other high end retailer? You know what I'm saying? The higher priced, higher cost stores, department stores, Victoria's Secrets, places like that, right? So get your undies at Walmart instead of Victoria's Secrets. They might not be as sexy, but they're going to be a lot cheaper. All right. Next, Suze Orman. $400 can make all the difference in an emergency. Yet 1 in 3 Americans don't have that much. 1 in 3 Americans don't have $400 in savings. Now, we've heard this statistic, and we put it out there for a few years now. Actually, in 2020, things changed. We had a freeze up of a lot of different loans and forgiveness plans, and people's savings actually increased. But now we're back down to the point where we're back to where we were before 2020, before all the assistance programs, the enhanced unemployment benefits, the stimulus checks, and we're actually below that and dropping every month. Savings of the U.S. consumer is dropping, and now we're back to this 1 in 3 don't have $400 in savings, and that's going to be big trouble very, very soon. I can't see this going on much more than 6 to 12 months before we start to see bankruptcies increase. Actually, on that note, bankruptcies are increasing. Let's talk about that next. And for this, let's go over to Wolf Street. Wolf Richter put out this article on the 25th, just a couple days ago. Consumer bankruptcies, foreclosures, delinquencies, collections, free money still doing the job. So check this article out, but I'm just going to go to one of the areas that he looks at here, and that is bankruptcies. Now, bankruptcies are at near a record low. I say near a record low is because they've recently started ticking higher. And we're talking about just in the last few months. So we have just over 100,000 consumers now on a monthly basis filing bankruptcy. 100,000 people or 100,000 households. This actually spiked up to nearly 1 million in mid 2006. So you could see, compared to that peak in 2006, where it was 1 million in a month, we're now down around 100,000. So we're very low compared to historical standards. Actually, even before that, before 2006, in the run-up to the bursting of the housing bubble, 2003, 4, and 5, it was between 5 and 600,000 people a month filing bankruptcy. So back then, we saw the kind of the uptick in the bankruptcy numbers. It dropped back down in 2007 when everything, hit the fan, everything exploded. But now we're on the rise again because it was just under 100,000 a few months ago, and we're now at about 102,000. That's what it looks like to me on the chart. I'll go ahead and link to this article, though. It's got this chart in it. Since I'm not putting up charts as frequently as I used to, I'll link to this for you guys to go check it out. But very good article. It also talks about the number of foreclosures. Actually, we're lower now than we were in the run-up to the previous housing bubble, which is pretty interesting. But when home equity is much higher, it's much easier for households to stay out of foreclosure. You can sell the home and then go on and take that equity and move into another home. Then you have a pretty sizable down payment when home equity is high. But what are households going to do now, coming up in the next 6 months, 12 months, 18 months, when the home equity is vanishing, right? There goes the lifeline. You can no longer sell the home, and you may still have some equity, but you're not going to be able to put as big of a down payment down one. And now with higher mortgage rates, you're not going to be able to handle the home prices where they are now. And you're going to be buying a depreciating asset, right? So this is where the rubber hits the road, in my opinion, declining home prices, right? And they're being very careful on raising mortgage rates, even though it's been a big spike this year. They could have went much higher if it weren't for all the intervention in the bond market, which basically controls mortgage rates. The central bank's still out there. They're buying stuff. They're buying bonds. They're buying the debt. Otherwise, rates would have to spike to attract any real investor, right? So that's what's happening, folks. I hope you guys like this update today. Hope everybody's doing well. Happy holiday season to everybody. We're going into December in a few days, and we're going to see these Christmas shopping numbers. They're saying that the Black Friday was a record. We talked about that in our last report. Was it a record just because everything costs more? Well, that's part of it. Also, a lot of people are just choosing to spend. One more article that I read here is how consumers are deciding to go ahead and shop more now. This was out of Yahoo. Americans are full steam ahead on holiday shopping. Quote from this article: "We've been through so much over the past couple years, so even though the economic situation is difficult and we're not exactly flush with cash," and that's most people, not flush with cash, "we need to let our hair down and enjoy ourselves." This is what one person said that they interviewed for this article. This year is full steam ahead for a holiday extravaganza. So even people that admit they're in financial trouble are just saying, hey, we need to let our hair down. We need to have fun. We need to enjoy the holidays. We're just going to go out and take on more debt and swipe credit cards. That's what it sounds like. So we're seeing greater participation among lower income households, those that earn less than $50,000 a year. They've settled into the new normal and are feeling more stable. That's out of this article. So people have just taken being in debt now. They're just taking that as the new normal, as just the reality of it, and they're not letting the debt stop them from going out and taking on more debt and having a holiday extravaganza. Well, there's always bankruptcy. That's the lifeline at the end of the financial rope, right? On the flip side, though, listen to this. High income earners, those that make $100,000 plus per year, plan to cut back by 7%, bringing their spending down to an average of $2,400 for the holidays. 100,000 plus households are cutting back, but the paycheck to paycheck crowd or households, they seem to be just letting their hair down, like I said, and having a holiday shopping spree. So maybe that's why they are paycheck to paycheck, and maybe that's why the high income earners are where they're at, because maybe they're a little smarter. Could it be? You guys let me know. Thanks for watching this report. Hope you guys liked it. Financial updates, news. Please, if you like to support this channel, please subscribe. It does help us out. We're not doing too well, compared to some other channels. I hope you guys like the news anyways. Thank you very much for being here. Big love. Keep stacking, and peace.